What's up, everyone? All right, well, we're going to break down the trades from today, Monday morning, back in the saddle. And I was excited for today because sentiment over the weekend is strong. It was strong. So S&P 500 futures at posting record highs. Bitcoin, record highs. And then this morning, Tesla pre-market squeezing, gapping higher and squeezing up. So right now, we are in a period where we've got some really nice tailwinds. Overall momentum is strong, sentiment is high, and I was excited to try to find a couple trades. But I was disappointed when I sat down and I didn't see any big gappers that looked good. One of the problems today was that we had dispersed attention again with leading volume going to a couple of low price penny stocks. I am green on the day on 3 out of the 4 stocks I traded, up $10,232.78. But if we look at the volume today, FOXO already has 307 million shares. Mara, Riot, BITF, CAN, these ones are following with high volume, but what do these have in common? Crypto sympathy stocks. So these are stocks that touch cryptocurrency in one way or another, but I've never found them easy to trade. So you might say, then why was I excited that Bitcoin was posting a record high? Because what I've noticed is that Bitcoin is a more speculative asset, a more speculative investment, as are all cryptocurrencies. Now, some people will disagree with me on that, but let's just say, for the sake of argument, we know that cryptocurrencies in general are volatile, and small caps in general are volatile. What I have noticed is that when Bitcoin crashes, small caps also suffer. We saw this in, I think it was December of 2018. We had a crash in cryptocurrency, and all of a sudden, small caps went totally dead. We saw it through the pandemic, cryptocurrency surging, and then when FTX went under and we had this collapse in the cryptocurrency markets, small caps were also dead. So they seem to trade similarly, and I don't know if that's an algorithm or what it is that has them paired in a certain way, but they're both, I would say, more speculative asset classes, and so there must be something there that is tying them together. So in any case, although I don't have interest in trading, generally speaking, most cryptocurrency-related stocks, I'm glad to see that cryptocurrency is doing well and Bitcoin is doing well, because I think that it bodes well for momentum traders in general in other speculative assets like small cap stocks. So when I first sat down this morning, no, we didn't have too much that looked good on the scans. And the first stock I traded was SUGP. SUGP is, it's a stock with a 3.5 million share float. We look at the daily chart. You can see that it's got a history of popping up. It's not like a stock that I've never seen or traded before, but it's relatively new. And the 200 moving average has just begun at $2.30 because it's only been trading for about 9 months or so, 10 months. So when this started to pop up initially, the first thing I asked myself is, how closely does this meet the profile of the right types of stocks to trade? Again, as per this video right here, where I talk about using those profiles to maximize profits during a hot market. So I noticed that the price is a little lower, $1.50, $1.80. The float, 4.5 million shares, is under the 5 million cutoff. Well, it's not really cutoff, but under the 5 million profile, but under 2 has been better, under a 2 million share float. And then I saw that it lacked news, but I also saw HK. So I'm thinking, oh, Hong Kong stock. Okay, so, this is something that I'm aware of. And we know that these are stocks that can be a little bit volatile and a little unpredictable. So as I saw it hitting the scans initially, I look at the chart, and this was as it was popping up right here at 7 a.m. And it first hits the scan at like $1.75, $1.80, and I pull it up and I see, well, it had this high here, and look, it hit a high and rejected, hit a high and rejected, which is very common of a stock that has no news. In fact, it happens on stocks that have news. So when they have no news, it's even more likely. But it goes through 2, goes straight up to 218, pulls back for a second, goes up to 230, which is right at that daily 200 EMA. It then pulls back for a minute, and I got in right here at 238. I bought 15,000 shares, and I added for the breakthrough 250. It hits a high of 253. It pulls back for a moment, and unfortunately, although it went all the way up to a high of 270, it was not really that clean. A bunch of topping tails, got bottoming wicks, topping tails. it just didn't pull away, and it certainly did not go parabolic. And I sized up too heavy. I didn't take the base hit when I had it, and I went red on the stock by $298. It's not the end of the world, but I am red on the stock. So that's my the first trades of the day. So then after that, we had PMW or PWM. PWM hits the scanner, same thing. There's no fresh headline. There's no fresh news. I look at the stock. Where's this company from? It can't be Hong Kong again. And it is Hong Kong again. So now there's a little bit of a trend going on. So I'm like, all right, we got another one popping up here. This one had begun to pop Friday after hours, popped up a little bit more pre-market, then out of nowhere went from $1 to $1.80. Now, some traders were mentioning some price compression on the daily. It compressed here and then pulled away. Compressed here and then pulled away. Compressed here and then started to pull away. But it also has a history of dropping down and not holding these levels. So I was a little skeptical. 200 moving average is about $1.66 up here. So on this one, I jumped in and I said, you know what? I'm not going to make the mistake I made on SUGP. I'm just going to take my profit. So I added on this one so it pulls back. I'm adding here for the break through the $0.50. It goes up to 60, 65, 70, and I'm taking profit off the table. And I'm saying, I don't want to push my luck. Or no, sorry. I bought this dip down here and it squeezes up here and I took profit off the table. And it ended up being a good exit because although it came back up, it didn't come all the way back up. So that was PWM. Next trade was on NUWE. This one hit the scanner with news. Pops up to 280, doesn't hold, comes back down. Was up on it, but gave back most of the profit, walked away with $740. And then we have the star of the day, RSLS. But you'll notice it's not on the top gainer scanner right now. It didn't hold up. RSLS hits the scanner at 8:30. It has breaking news. It's a former momentum stock. It's got a lot of room to the 200 moving average. It's a somewhat recent reverse split. It checks the boxes and meets the profile, and I jumped in it. Unfortunately, although it squeezed, I got in a little high, adding as it started to get closer to 10, looking for the break of 10, and it peaks at about 11 and then flushes down. Not great. Has higher volume on the selling candles. I did a dip off the low. Actually, it was down here off of this candle here in at 723. But even the dip didn't really work. And I was hoping maybe at least it would curl back up. It couldn't curl back up. So the best thing was that, again, on this one, I took my profit when I had it. And maybe, realistically, if I'd taken my profit when I had it on SUGP, it's not like I would have really made that much. But that put me in a mentality where I did better on the following trades because I just said, take your profit when you've got it. So ended up on that trade making $6,700, and it was in less than a minute. It was a very fast trade. And this is the trade where the first spike is where I can potentially build a cushion. Now, I can also take losses, of course, but potentially that first spike is where I build a cushion, and then I'm waiting for that curl for the next trades, and I'll continue trading it. Unfortunately, in this case, it didn't curl. We didn't get that second leg higher. So, there was nothing more to do on it, unfortunately. SUGP this morning, that gave an initial pop, which you could have traded, pulled back, and then you got the curl. So sometimes those curls can be stronger than the initial pop, which is always exciting. And I'm happy to trade both. And if I miss the first pop, I'll still trade the curl. So I saw someone mention that the strategy that I trade of trading, this pop on breaking news doesn't work for most traders if they don't trade pre-market. And you're right, that right now I'm mostly trading pre-market because that's when news comes out. So this is a strategy that really capitalizes on breaking news, and that's mostly happening pre-market. But you don't have to trade the first pop. When the news first comes out, you can have the pop, the rejection, and then take the second leg higher. And sometimes that's forming a 5-minute bull flag. Sometimes it's a break below VWAP like this was. And again, this is not a great example because it didn't have actual breaking news. But I think you get the idea. You've got that initial knee-jerk pop from typically a news catalyst, and then if it holds up well, you get continuation as it squeezes higher. And if we look back on stocks like ATNF or Drug or some of the others from previous weeks, you had that first move, a pullback, and then that curl and the surge higher. And that's where, we can do really well, even if you miss that first first leg of the move. Now, if you can catch both of them, then you do have the added advantage that you've built a little bit of a cushion early on, and now you can use that to take a little bit more risk on trade 2 and 3, which is nice. But, whenever you get your cushion, as long as you have a nice cushion, then you can use that to take more risk if you'd like. And other traders are just going to take the base hits off the table, and there's nothing wrong with that either. So, and I do think, I don't know if I mentioned this already, but today being a bank holiday, cash account traders were locked out, not able to trade, which was unfortunate. So I do think that probably affected volume in the market a little bit today, and perhaps, liquidity not quite as good because of that. So just looking at the S&P 500 and sort of daily levels here. Yeah, I don't know. I don't have anything connected back here. This would be too steep going up. No, maybe not. So sometimes you start looking at levels like that, but I don't know if those are really in play. Tesla, really strong move. It's very impressive. I sort of thought after that first pop that we would get a pullback, more like what we've had on IWM, where we had that pop and then pullback and then a surge higher. But Tesla hasn't really pulled back, hardly at all. It's just going higher. And the IWM, I mean, look, this is the small cap index. It's at all-time high. Oh, sorry, not quite. It's very close to all-time highs. So, this is good stuff. This is good to see. All right. So we're moving in the right direction. And as long as you can manage your risk and you can be disciplined about cutting your losses quickly, I think that this will be a favorable market. I did a pretty good job cutting losses quickly today. Was a little disappointed. I guess, after you start getting into a string of having some big green days, you get a little spoiled. You're starting to think, well, gosh, my new normal is $15,000, $20,000 a day. I'd like to catch a couple more days like that here. And, it's nice when you get it, but last week was a great week, averaged 25,000 a day, a little bit more than that over the 5 days. But, less on Monday, less on Friday and Thursday, Friday. It was really some good trading on Tuesday and Wednesday that gave me the bulk of that profit. So sure would be nice if we get some nice moves, maybe Tuesday, Wednesday this week, Tuesday, Wednesday, Thursday. Usually Friday, I expect it to be a little bit slower, but Monday and Friday, not uncommon for it to be slower, but then Tuesday, Wednesday, Thursday. And sort of part of that is that, so look, now today, I've got a nice cushion from Monday morning, right? So starting Monday, plus 10,000. So now coming into Tuesday, I can take more risk. Now let's say today was minus 10,000, if it was a red day, right? So I'm down 10,000, then all of a sudden for Tuesday, I'm like, don't have 2 red days in a row. So what do you have to do? You've got to just take your base hit, be a little bit more conservative. If you can be up 5,000, that's good. By Wednesday, maybe I'll make back all of the loss. And then maybe Thursday, it's kind of like easing off the throttle. But when you start strong on Monday, then all of a sudden it's like, I've got a $10,000 cushion on the week. So now I can come in tomorrow swinging a little bit harder, and boom, if we have some good opportunities, it could be a better day. That's Tuesday. And then Wednesday, I'm firing on all cylinders. I've had a strong Monday and Tuesday. I'm ready for some solid trading. Thursday, let's ease off the throttle a little bit coming into the finish line. And then Friday, take it slow going into the weekend. So this is kind of like a very typical week. And that's pretty much exactly what you saw last week. And so I'm off to a good start to have a week like that again here this week. But at the end of the day, it's going to depend on the market. The market has to give me the opportunities because, if we don't have stocks that are moving, if we don't have stocks that have news, then, it'll be slow. So at the end of the day, we need those catalysts. But what's interesting is that in a hot market, a catalyst that maybe in a cold market wouldn't have gotten much attention or wouldn't have done anything at all, in a hot market, that same catalyst can send a stock up 200%. That's what's so frustrating as a beginner trader, because you think, wait a second, I feel like I did the exact same trade, but last time I took it, I had a huge loss. This time it's a winner. What gives? And the difference in a lot of cases is that sentiment. It's external to you. And so you have your strategy, but you have to recognize that the performance of the strategy varies as environment varies. So it's not like the market is fixed every single day. You'll have markets that are really hot where you can do really well, and then other markets that are colder and you don't do as well. Now, certainly some of the best traders out there are so good that they've mastered a dozen different strategies. So when one is up, another is down, and so on and so forth. So they're doing small caps, but when small caps are slow, they switch to whatever. And so they just get this really nice average, which is phenomenal. But it's like being able to write fluently with both your left hand and your right hand in 12 different languages. I mean, it's just like you've got to have, it's a very heightened level of emotional awareness, of aptitude. I'm not there. Honestly, the only people that I really know who are there aren't people, but they're algorithms. And they've been trained to do this when this happens and this when this happens, because it just gets really complicated. And we're human. We're only human. And we're trying to do something that's really difficult, especially up here when it comes to trading psychology. So look, if you found this episode interesting, I'll put a link down in the comments where you can do either a 2-week trial, or you can check out one of my free classes. I have a free day trading course, which you guys might enjoy if you want to learn more about my strategy. So check those 2 things out, and I will see you for the next episode real soon. And I'll remind you, as always, trading is risky. My results are not typical. So please manage your risk and always practice in a simulator before you put real money on the line. I'll see you live streaming back at it tomorrow morning for all Warrior Pro members.